I think that my first advice generally is get yourself some Bitcoin.
The way they get Bitcoin is going to be because they work and they get paid in money, and that money is going to be Bitcoin.
The risk of not doing anything is higher than the risk of doing something.
So let's say I've learned a little bit about Bitcoin, and now I'm thinking, okay, I want to buy some, or how do I go about getting some Bitcoin?
Well, I mean, I think you got a lot of choices. I would probably err on the side of picking the most convenient Bitcoin application or exchange you can find in your jurisdiction. It depends on what country you're in. And if you buy one on an exchange, make sure you can take the Bitcoin off the exchange to your private wallet. So you could buy it through Fidelity and take it off the exchange, or you could take it off the exchange of Coinbase. And I kind of like Square because you can buy it and also take it off the exchange. There are some Bitcoin purchase routes that I won't name where you could buy the Bitcoin, but you can't take custody of the Bitcoin. So you're really just buying a Bitcoin derivative and you would be trapped with that custodian. I think that my first advice generally is get yourself some Bitcoin. That's my first advice. And my second advice is when you get the Bitcoin, make sure you get it from a place that will let you switch custodians or take personal custody of it. And then after you do a little bit, then start to get educated, and then you'll form opinions about where you want to hold it long term and how you want to hold it long term. And you'll have all your options available to you.
The number one thing is don't be afraid of it. I think people tend to get overwhelmed very easily. A very good way to start is to just get a little bit of Bitcoin, take custody of it yourself, and play around with it. Get comfortable with it. Send it around, send it back to yourself. Maybe if you have a friend, you can send it between, and just get used to like the whole backup process. The whole concepts around Bitcoin on the surface seem very, very overwhelming to people. But once you start to get used to it and get comfortable with it, it's a lot more approachable.
Yeah, and so there's different ways to get involved. Another way is actually to earn Bitcoin. So do either of you guys have comments on how to go about doing that?
I think for most people right now, it's, you kind of have to seek it out. If you want to earn Bitcoin, you have to, maybe, you find a job that your boss loves Bitcoin, right? And you ask them to pay you in it. But I think going forward, when you start to look at like a 5-year, 10-year timeline, the majority of people who the way they get Bitcoin is going to be because they work and they get paid in money, and that money is going to be Bitcoin.
I think that Bitcoin mining is a different business. If you're a Bitcoin miner or ready to be a Bitcoin miner, you know it, but probably the normal person isn't. I think in terms of getting paid in Bitcoin, if you have you could ask someone to pay you in Bitcoin. It would be the tax efficient way for them to do it would be, if you told me to pay you in Bitcoin, I would go on Square or go on some app. I would buy the Bitcoin today, and then I would transfer it to you today before the price changes, so I don't have to file it with my accountant and attribute a loss or a gain to it. So generally, if you're getting paid in Bitcoin, someone's going to be buying it and transferring to you. But if you got to keep in mind that if they could do that, you also have the power just to take delivery and take the pay in dollars or any currency, and then you just convert to Bitcoin upon receipt. Probably the big takeaway here is, Bitcoin's an asset, and it's treated as property for tax treatment. It's not treated as currency. And what that means is you generally want to buy it and hold it for long periods of time, because every time you transfer it or you sell it, you incur a capital gains tax or some kind of tax. And that's very inefficient. It's just a bad idea. So the longer you can hold it, the better. And anyway, probably the single most important thing to do is convert as much of your discretionary income as you can afford to save into Bitcoin as soon as you can, because it is an appreciating asset over long periods of time. But don't do so much that it just stresses you out and you can't sleep at night. It seems like there's a lot of choices, right? Ranging from mobile payment applications that have open wallets to wallets that come with the exchanges that may be multi-factor. I mean, that could require YubiKeys, to hardware wallets that are more secure. And then there's downloadable mobile wallets that some support Lightning and some don't. And there's like a host of them. They all have various pros and cons to them. As people get more security conscious, they tend to move toward hardware wallets with multi-signature, multi-factor authentication. But it all depends upon how much Bitcoin you've got, and also where you are, and also, are you a business or are you an individual? And maybe you have some other personal issues. What's your transaction frequency gonna be? Well, I think in our current monetary environment, you could reasonably expect that the economic energy in any currency in the world is going to lose 1% of its value every month. And in a weaker currency, you would lose 2% of your value a month. And so if you're saving your money in a currency, then the clock is ticking and you're losing your savings. If you're saving your money in bonds, it's no better. You're still kind of losing your savings about the same rate. If you're saving your money in a stock or a stock index, generally at least half of the value of the stock, if not more, is based upon the cash flows, which means that a lot of value stocks will just look like bonds. They look like currency derivatives. So a large number of things that you could hold with your life savings are exposed to currency debasement. And so it's important that in a weakening currency, you, in a disciplined fashion, be converting your economic wealth over into an deflationary asset that's not going to be debased, that won't be inflated away, and that presumably will appreciate in value faster than the rate of the currency expansion. So Bitcoin is kind of that engineered savings account in cyberspace. If you hold 90% of your money in the other savings account and the currency loses lots of its value, then your life savings is just leaking away. So I think discipline with regard to where you store your wealth is kind of critical. And, the weeks fly by and the months go by, and at a 15% in monetary inflation rate, that means that you're going to lose half of your money within about 4 years. It goes fast. So I think the good discipline there is helpful. Just be protecting yourself financially. If you're in the US and Europe and you're in a strong currency that's kind of pegged to the dollar, we kind of think that that's weakening 15% a year, maybe more, but like 15% a year, a little bit more than 1% a month. But if you're in a currency that's weaker, that is weakening against the dollar, certain currencies, in the second tier, they're weakening 20% faster, and the third tier currencies are weakening 2 to 3 times faster. If you think that the currency that you're working in is weakening against the dollar, you can see this in Turkey, you can see this in Lebanon, you can see this in certain other countries, Nigeria, you should scramble harder, right? You don't really necessarily, the risk of not doing anything is higher than the risk of doing something. And so there becomes a point where I would say people ought to move fairly aggressively to at least get their money out of the weak currency. You got to judge how much you trust that currency in your given country, wherever you might be.
In terms of earning Bitcoin today, right? If you're in one of those economies that's doing worse, that has a worse currency, and your job is a digital job where you have clients that are located in the Western world, the client that's located in the United States, for instance. It might be easier in that situation for you to actually get paid in Bitcoin and have them convert on their side, even if they don't have Bitcoin, right? So I think that's that's something that we forget about a lot. But if you're purely a digital contractor, and not only are you dealing with this poor currency at home, you also have to deal with like all the foreign transaction fees and whatnot in terms of them transferring it to you. So in that case, the argument to be paid directly in Bitcoin today becomes way stronger.